This is the Global Economic Scrap Metal Commodities and Recycling Report by BENLEE Roll-Off Trailers and Lugger Trucks, March 25, 2019. This is a special remote edition as we attend the annual demolition show in Denver. Last week, commodity prices and economic reports were mixed. U.S. steel production fell slightly to 1.93 million tons, near the multi-year high. Tariffs and a slow growth economy remain supportive of good volumes. Oil rose 66 cents a barrel to $59.04, up about 30% this year. Reduced OPEC volumes, as well as lower volumes from Iran and Venezuela, are driving higher prices, bringing higher gasoline and diesel fuel prices. U.S. oil production rose slightly to 12.1 million barrels a day, matching its recent record high, as higher prices bring more U.S. pumping. Iron ore fell slightly to $87 a ton, as demand remains good, but slowing in many markets. Scrap steel number one was steady at $318 a gross ton on steady demand and good supply. With good supplies and slowing demand, prices could be steady to down next month. Hot-rolled coil steel fell slightly to $34.54 on a good supply and weakening demand in automotive and other markets. Copper fell 6 cents to $2.85 on a slow growth economy. Growth does continue in many markets, but it does continue to slow. Aluminum was up 0.3 of a penny to 84.6 cents as many industries slow around the world, while aerospace remains strong. The U.S. Federal Reserve said they will pause on raising interest rates as they took their January forecast of a 2.3% growth for 2019 down to a 2.1% growth because of all the global slowing. The White House also released a forecast stating it will be a 3% growth in 2019, helped by tax cuts. FedEx, one of the largest freight shippers in the world, announced a major miss in earnings, saying slowing international macroeconomic conditions and a weakening global trade growth trends continue, as seen in our recent decline of our international revenue. This is yet another indicator of global slowing. March's U.S. Manufacturing Index continued to show growth, but at the slowest rate in 21 months on slowing output, new orders, and employment. March's Eurozone Manufacturing Index fell to 47.6, meaning continued contraction, not just slow growth. This is the sharpest contraction in about 6 years, with the sharpest drop in new orders in over 7 years, as European exports to China fall. The Eurozone is larger than the U.S. or China, so this is a big deal. The interest rate on the U.S. 10-year bond fell to 2.46, which will keep interest rates in many markets such as housing down. And with that, mortgage interest rates fell to their lowest rate in about a year, which will support increased home buying. And that, of course, led to February's U.S. existing home sales surged 11.8% to an annual rate of 5.51 million, the highest reading in 11 months and the largest monthly rise since December 2015. Higher sales support future growth. Wall Street's Dow Jones Industrial Average fell a big 347 points to 25,502 on concerns about the global slowing, along with no resolution of the China trade talks. As always, feel free to call or email me with any questions, and we hope all have a safe and profitable week.